premium tax credit. Okay, so the Affordable Care Act, I want my marker again. The Affordable Care Act, one of the things that it did was it provided premium assistance to individuals who are families who were less than 400% of the poverty level. So what's the poverty level? So the federal government sets the poverty level. They determine based on family size what is considered to be poverty level every year. And there are a lot of things that are a lot of factors that are used where that information is used. So like to provide certain types of assistance, whether you qualify for certain types of assistance will depend upon where you fall either on or above or below the US poverty level. So the poverty level is used to determine whether individuals qualify for assistance in paying for their insurance premiums. Now, one of the requirements is that individuals have to purchase that insurance. Health insurance is what we're talking about here. Health insurance has to be purchased on a healthcare exchange that's run by either the federal government, or if the state government happens to have one. Some states have one, some don't. But there is a federal healthcare exchange. So you have to purchase your health insurance through that exchange in order to qualify for any tax credit. It's a tax credit, and you've got two ways that you can take advantage of that tax credit. One of the ways is you can just claim the tax credit when you file your tax return. The other way is through you can apply it during the year toward your health insurance premiums. So for example, let's say you qualified, your health insurance premiums would be $400 a month before any credit. And you qualify for, based on information that you enter in when you apply for the insurance, you qualify for a premium credit of $2,400. You can apply that credit at the time that you file your tax return, the whole $2,400, or you can apply it toward your monthly premiums. So that's $2,400 divided by 12 months, $200 a month. Now you're paying $200 a month for your health insurance premiums. So it's like a prepayment, like the child tax credit that we talked about, where it had that advanced payment option in 2021. Same thing. So you got this choice between the two. The thing about this is, though, when you are calculating what your credit is, so right now is open enrollment for the federal healthcare exchange. What you're giving them, the information you're giving them, is your current year income. But this premium credit, ultimately, when it's calculated on your tax return, and it will be calculated on your tax return, is going to be based on next year's income. So there's this difference between the premium credit that you may qualify for now and the premium credit that you ultimately qualify for when you file your tax return. So there's a chance that when you do, for example, initially you do all the calculations, fill out the application, pops out a premium credit of $2,400. That's based on your income, it's based on your family size, it's based as well, I think, on where you live. There's all sorts of different factors that go into it. If one of those factors changes over the course of the year, that actual premium credit is going to be different. So let's just say, initially it said you qualified for a premium credit of $2,400, but when you filed your tax return, turns out you actually only qualified for a premium credit of $1,800. Well, guess what? You got to pay back the difference. between what you received if you choose this option. The option to apply it to your monthly premiums. Now you've got to pay back the amount that you weren't entitled to, right? So there's a $600 they paid you $600. So here's a $600 difference that you have to pay back. Same thing could be true the other way. When you file your 1040, it turns out that you were entitled to $2,600. Well, now you're going to get an extra $200 back. So the premium tax credit is, like I said, it's ultimately reconciled on the Form 1040. The amount that you're entitled to, if you have taken it as a prepayment, there's a chance, a pretty good chance that, chances are very good that it's not going to, that credit when you file your tax return is not going to equal what you thought it was going to equal. If you got married during the year, if you had kids during the year, if you got divorced during the year, your filing status changed, it's going to change that amount. Okay. So, but it's only, you are only entitled to that at certain, like I said, at 400% of, or below of the poverty level. Now, 400% is actually not that low. Think about it, here's the poverty guidelines for this is for 2020. I don't know what they were for 2021. So 400% means you multiply this number by 4 based upon the number of people in your household. So you've got 4 people in your household. What is it here? 26,200, multiply that by 4, that's over $100,000. If your income is below that, then you would be eligible for some premium assistance and some premium credit. If it's above that amount, you would not be. Again, you have to purchase the insurance through the healthcare exchange. You can't just go out. It doesn't apply if it's employer provided insurance. It doesn't apply if you go out and just purchase it privately. It has to be through the healthcare exchange. Let's see. So, and there's a table that shows you how to figure this out. So let's look at Shantae. Married with one dependent, household size of 3. Income is $59,370. This household income is 273% of the federal poverty level for a household size of 3. So what we would do is take the income divided by this amount here. And then you would use that, let me do this here. Oh, let's do this. To receive the credit, eligible must have household income, yes. Between 100, and it has to be between 100% and 400%. If it's below 100% of the poverty level, essentially the thought is that you would qualify for Medicaid. And that's where you should be purchasing your health insurance, or where you should be obtaining your health insurance, not through the marketplace. Let's see. Let's look at this. Gordon is single with no dependents. He enrolled in a qualified healthcare plan with an annual premium of $5,000 through the marketplace. His SLCSP, which stands for, where is it here? Applicable second lowest cost silver plan. They rate these plans using precious metals. So silver is like the top tier is platinum, and then gold plans, and then silver plans, and then bronze plans, and then plastic plans. I think bronze is the lowest tier. So $5,200. His household income was $29,900, 234% of the federal poverty level for a family size of 1. Applicable figure using table 2 in the instructions, appendix B, where is it? Here we go. So this is the percentage of poverty level here that is calculated, and then there's this ratio that is entered on the form, and this is the form 8962. And it's used in the calculation of what the premium credit would be. So his number from that form is 0.0336. If you add it to the form, so it's the 8962. So here's the calculation. So family size here, so let's say 1. Modified AGI, what they say, 29,900. Dependents modified AGI is 0. We don't have any dependents. Household income 29,900. Federal poverty line, you would enter it from the table for their house, their size, so 12,760. Household income is a percentage of federal poverty. This is where you would do you would divide them. So. Applicable figure, using your line 5 percentage, locate your applicable figure. So 43, that's where the table, sorry, the appendix B comes in. Oh, sorry, I did this wrong. I had the wrong denominator. Should be 29. No, I did it wrong. 29. Sorry. Yes, 29, oh, I meant 234%, 29, okay, I did have it right. Apologies, so I have the wrong numerator here. So 234, and then you would look up the 234 on the B. 234.0336, you enter that. Multiply line 3 by line 7. 29,990. $100,766. This is the maximum amount that he would be expected to pay for those premiums. Anything else is, anything over and above that is going to be in the form of a premium tax credit. I'm sorry, this is the amount of premium credit he's entitled to, 10766. No, I said that wrong. I keep getting it mixed up. This is the amount he is expected to contribute. So this is what we would divide this by 12 months. So $83.97 per month is what he's expected to contribute. The premium tax credit would be the difference between that and that silver level plan premium.
What goes on line 5?
Line 5 is household income as a percentage of federal poverty line. I didn't put that in there.
I was confused with that, but you skipped it,
It's-
and I'm like, no.
So household income. So I think it was, I did this wrong, so it should be 0. So that's gonna be. Divided by the 12,760. So 2.34%, or 234% of the federal poverty line. Questions about that? There we go. Questions about any of the credits? Those are the credits.